Yeah, look, it is. It's really bad news for Victorians. We know that they've just starting to open up in terms of their economy. Things are starting to do well, and then to be told to get back into lockdown is just terrible situation for them. For property or for the economy in general, it will depend on whether they get the virus under control quickly. A 6-week lockdown isn't the end of the world, but it does put Victoria behind what's happening in other states where the economy is as well and truly opened. So property, we know commercial property, particularly office property in CBDs, has been very tough, and this won't help. Shopping centres as well. We know that people don't shop as much when they're in lockdown. And then for residential property, we will probably see we are seeing significant changes in the way people sell property. And in terms of what property people are looking at, it does seem to continue to be this flight to quality. So people looking at premium locations and shying away from more of those high volume markets that are aimed at investors.
Well, for the time being anyway, look, I think everyone's obviously praying and hoping that there's not a second wave in Sydney and other cities. But Sydney is just sort of ticking by almost normally at the moment.
Yeah, look, and hopefully that remains the case. I mean, Sydney has managed to get the virus under control very well, and people are on high alert. And I think that's a good thing, that people are worried about whether a second wave could be brought up from Victoria. In terms of the way the New South Wales government has handled the quarantine hotels, we can see quite clearly that led to far better outcomes for the state than what happened in Victoria. So, I hope New South Wales doesn't experience what's happened in Victoria. I think everyone is hoping that we can keep the economy open and keep things ticking along.
It's going to be an interesting time, isn't it? Excuse me, particularly when JobKeeper finishes. We've seen representatives of some banks say that it's going to get to a point possibly where people are going to be forced to sell their properties because they can't just keep continuing to push back the interest on loans. And some banks will allow this to continue, but at some point it's going to be breaking point.
Yeah, that's right. I mean, the September date is the key date that everyone's very nervous about. A lot of things come to an end. As you said, the freeze on mortgage payments is expected to come to an end. JobKeeper, a lot of the stimulus that's been put in place. So, I think everyone was hoping that 6 months this would be pretty much over and we could get back to normal. In terms of the way the banks are reacting, we are hearing that they are putting a lot of loans onto interest only for people that are affected by COVID lockdown. So, that's good news. And I think this is a thing with the banks, that they are well capitalised. They are being incredibly cautious, which makes sense in an environment where we have rising interest rates. But, for now, we're not seeing any distress or extreme distress in the property market, but there will be a lot of people that are feeling quite stressed, particularly if they've got an investment property and they've lost a tenant or are not receiving any rental payments on that property. So, those are the types of owners that we do expect to be more distressed over the next 6 months.
Yeah, and if those are the circumstances, if they are grim, well, then obviously you need a holiday, but the interest will be paid later. But the advice has to be that if you've got the opportunity to pay it with these interest rates being low, just keep ticking it over, isn't it, Nerida? That's the best way to approach it.
Yeah, absolutely. I mean, the loan's not going to go away just because you're not paying the mortgage. So, keep paying off that loan. And if you are fully employed, I mean, you are in a very fortunate position, and it does allow you to get on top of your loan. And as you said, while interest rates are low.
Now, it's a positive story. Orange, I love Orange. Mount Canobolas, the cold climate, Chardonnay, the beautiful township of Orange. And it's become a hit with first home buyers.
Yeah, it's quite incredible. We've been looking a lot at inquiry levels on realestate.com.au recently. So we can split inquiry according to buyer type. And when we had a look at first home buyers over the last few months, we have seen this incredible level of interest in Orange. And so much so, we're actually seeing more first home buyer activity in Orange than we're seeing in somewhere like Kellyville. So, Kellyville is an area that there is a lot of activity, a lot of first home buyer activity, but Orange is actually seeing more happening. I think there's a lot to love about Orange. What's interesting, it's not a commuter town to Sydney, so it isn't relying on the Sydney economy in the same way that places like the Illawarra and the Central Coast rely on it. It is relying on its own economy, and it does seem to be driven a lot by tourism. It is a great place to visit, health sector, education sector. But there's also mining. So a quarter of the economy is relying on mining and gold mining in particular. So, gold is having its moment at the moment, and we are seeing quite incredible pricing for gold. And next year, Australia will be the biggest gold producer in the world. So, Orange is really benefiting from this renewed interest in that commodity.